think 2019, as much as we've seen a lot of events across different spectrum, I also see it as that year where we typically prepare for what would happen in 2020. And why am I saying this? Regulators seem to be gearing up for an election year. So CBN has given out regulations regarding payment services bank, regarding payments, what's it called? The pension commission had given out regulation regarding micro pension, right? NICOM has started doing things around, regulating insurance and distribution. We've seen startups in health insurance already. So this kind of activities we've started seeing. So 2019 for me, where I see the opportunities for growth, once we are able to get people much more into the financial system through, hopefully, the payment services bank, with MTN, all the telcos trying to get into financial inclusion through their own network. Once those people can be captured into the digital ecosystem, then we have sufficient data around how to lend to them, how to make them save, how to ensure that payments from Lagos to my grandmother in the village, is possible, right? And doing this digitally. So I think for me, once, like I said, the payment infrastructure had been laid, every other thing can now be built, upon that. But until then, I just see it as, okay, we're trying to solve problems, that are, small enough for us. But once we're able to digitize quite a number of people, which I hopefully believe that the PSB will be able to do, then we could see real growth, as well from the Nigerian perspective.
I think speaking more broadly for the fintech industry, what is difficult is that what is already established is generally payment regulation as pertaining to large financial institutions such as banks. So, there's sort of, I see in most of the markets where we operate, a lack of clarity. I think here in Nigeria, there's progress with PSSP licenses and this payment systems bank. But most markets don't regulate mobile money, don't regulate microinsurance, and they're often very bank-led. So I think one concrete barrier to entry, other than the lack of regulatory clarity, is if there is something existing, really high capital requirements. So most early stage fintechs are just struggling to raise money for their own basic operations, much less having, for example, in Ghana, if you want to be under the current payment systems regulation, you need $500,000 if you're a foreign company. So I think there's a lot of concrete barriers that make it difficult for fintechs to even seek licensing in a market if it even exists. Our approach has been, our first license was actually in the UK, which I thought would be the hardest license to get, but ironically was actually the easiest. And we're in the process of being regulated across our markets in Africa.
I probably will go over and ask Lexi if you can comment on any risks that you see, pitfalls that you can share with us and people should look out for in this journey?
Yeah, so I think that the biggest risk that we've really faced with our existing portfolio companies is, and other companies that we've seen also operating in this market, is because there's so many problems to fix. There's been what I would call sometimes irresponsible growth. So a company that maybe has shown a lot of success early. They try to reach and do every single product under the sun, try to grow their team as fast as they can and try to raise a bunch of money. But at the end of the day, their platform is maybe not really yet built with the foundations that could really enable that responsible growth and allow them to hold on to their market share, as well as scale into other markets. I think a lot of this really boils down to also putting a high quality team in place that can help drive that growth, and keeping that team around for the long term.
From the CBN, we've heard comments or quoted comments from meetings where the CBN suggests to be out to protect the incumbents at all costs, irrespective of what sort of innovation you might have. Like we've mentioned here earlier, the regulation regarding payments, again, it's not necessarily. I don't understand why the CBN is doing that, because it just raises capital requirements for payment services that you don't necessarily hold cash for anything. So again, it's just that idea of protecting the incumbents, so from the regulator side that we've seen. Irrespective of, however, how the regulators have decided to curtail or support growth, I think we've seen brave entrepreneurs within Nigeria, at least, trying to maneuver, through partnerships, with already licensed companies, to provide additional services to people that they would typically would see as non-productive. Like the last panel was saying around providing loans to retail. There's no point for opening up a branch, that will provide a 10,000 naira loan. It's not just cost efficient for the incumbents, but with technology layering on that, and then partnering with banks, you're able to extend these services to other people. But specifically to your question regarding regulation, I think to a large extent, in Nigeria, I would think the regulators are holding back, innovation to a large extent.
I still don't think we've seen a lot of solutions that have really unlocked the mass population of the Nigerian consumer. And I don't ever have a great solution for that, because I've also seen that agency models are very expensive and difficult to do. But I would love to see some creative solutions around that, whether it's leveraging off of other platforms like telcos, or maybe even gambling companies, or maybe even churches or co-ops that already maybe have a broad agent network and really able to unlock that consumer base. That would be a great opportunity.
I would say at the base level, infrastructure is really critical, and I think that's one of the reasons why you see so many great fintechs in Nigeria, is because there's a solid infrastructure provided by NIBs. And you have instant payments to banks here, whereas in East Africa, RTGS is 24 hours at best, and often it's T+2 or more if you're lucky. So I think it starts with infrastructure. So having great connectivity and interoperability between banking networks, mobile money operators, agent networks. So easing the infrastructure, that's the base. If you don't have the infrastructure, having a fintech going out and building infrastructure for themselves is not a scalable model. So I think that's the base level. And then certainly, whatever we can do to continue to support early stage startups, and beyond that, so it's from ideation to incubation, but also really setting them up for success to scale up. And that comes in the form of, I think, investment. So I think sometimes there's a missing middle where it's relatively easy, depending on the market, to raise seed funding and sort of early stage investment, but then the next deals up are like PE and VC size, like 5 million plus. So there's sort of a missing middle that we saw when pre-Series A, where if you're trying to raise like $1 million to $3 million, the number of funds that do that kind of deal size is smaller across the continent.
Well, I'll just quickly mention, I think as we look out to solving problems, I see opportunities for growth in micropension. Nobody seems to have explored that in Nigeria already. That's fine. As much as I see opportunities coming up next year, I also see a lot of headwinds. So from election year in Nigeria, for instance, we understand how foreign portfolio investors will typically respond to election years and all of that. Crude oil prices is trending down, so we need to also be cautious about where macroeconomically Nigeria will be in 2019. And then finally, when it comes to funding, we've also found out that a lot of local VCs in Africa or in Nigeria, to a large extent, are foreign LPs. So it means that the funding is dollar denominated, we have currency exposures and all of that. So try to see if we can encourage local participation in seeding venture capital funds and then to invest in local startups would at least to a large extent edge currency risk, and then we're able to fund and support startups as they go forward. I think putting all of these together, I think we'll have a great ecosystem going forward.